Hey everybody, well that was the closing bell, and that means it's time for us to get started here on Tuesday with generating income. My name is Mike Fairbourn. It's great to be with you all today. Would like to welcome for Checkout Jack. We've got Alan on TM, we've got David, Pine Tree, BJ, Rocky, George, and others here, SJS, Robert Boucher. We've got Riceberg, Long Snapper. Folks, we've got many of you. Great to have you here. George, as well as Ken and David, welcome. We've got James Boyd in the chat. You'll see him as JB, a good friend of mine, a guy that I must say, have gone biking with up in Park City. He could tell you about that story. He does like to bike. I like to bike, so we hit some bike rides from time to time, among other things. It's great to have him in the chat, very knowledgeable with fundamentals. Today, folks, I wanted to take a look at, hey, what is it that smart money might be buying? It's really, really interesting with dividend paying stocks. Let's look specifically at maybe some of the reasons behind maybe some of the increases in that money flow, in that on balance volume, and really see what we've got in there where we can really get a shift in that uh, higher number of buyers, and we'll really see that in those lines going higher, relatively speaking, based on that money flow. Okay, so I want to go through that. I think it's very important to do, particularly with companies that we look to be owning, like dividend paying stocks. And so I want to break that down again, talk to you about some of the key divergences that are occurring right now within those dividends, and also set exit areas, potential exits at maybe a 2 ATR. So we want to have an exit strategy in place as well. Having said all that, let's hit some disclosures so we can dive on into our topic. But it is great to have you all here today. Options do carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular strategy, security, or a chart pattern. Paper money software applications for educational purposes only as well. Investing does involve risk, including loss of principal, and past performance of any security or strategy does not guarantee future results or success. Now, as we look at some of the other disclosures here, I wanted to note that there are risks associated with investing in dividend-paying stocks, and many of the stocks we'll be looking at have had a history of paying dividends, but even if they've had a history of paying dividends, raising dividends, uh, they could still have additional risks, including but not limited to the risk that stocks may reduce or just stop paying dividends completely. There is a look at the option Greeks, but today I think we'll be sticking mainly with our dividend paying stocks. And so, having said that, let's move on into this methods of income generation, where we do talk from time to time about options, as I just mentioned. But really, today the emphasis is going to be on dividends and those companies with dividends, but also with potential buyers behind those within these companies. What might they like when they look at a dividend paying stock? They might like, first of all, the yield. Yield could be an interesting one. They could like the technicals. They could like the fundamentals. I'll just put F and T, fundamentals, technicals. In addition to that, they might like, future projected growth from something like the analysts as well. So whatever the reason might be, we want to take a look and see why an indicator, which is really kind of a combination of a fundamental technical type indicator, is going higher on this group, one that we might plan to own for a period of time. And this is just a topic I'd like to discuss at least every month, if not maybe during at least once a month. I might do that as well. So I've looked at some of the OBV divergences over here. A quick note too, as I highlight this, I'm going to go ahead and just show you what we have up here, how we finished off the day in terms of the markets. Just generally, I'd like to look up here real quick and see how we were doing. And I would say, generally speaking, we were flat with the NASDAQ leading the way. Still, some solid strength there in the gold and silver markets that continue to remain strong. We even saw a bounce today in crude, which is one that we can look into because there are a couple of companies that do pay dividends that might fall into that category. Smart money. What the heck is smart money? What's going on with it? I'm going to start off actually with one of those companies right now. But actually, I'm sorry. Before we do that, I've created a 6-month grid of all 11 of the S&P 500 sectors sector indices that we can kind of take a look at here. I want to kind of highlight a couple of these here for you to take a look at in terms of just broader strength. And this can be helpful too, because we do have a number of dividend paying stocks that are going to be, definitely within, well, they have to be, they're all within the S&P 500, bottom right hand corner of the S&P 500, but they're all going to be within these 11 sectors, some more than others that do pay the dividends. Clearly, you are going to see some in energy, which, by the way, off the bottom has begun to have a shorter term trend change that we haven't seen over the past really 6 months. We've seen just a steady decline, a steady history of lower lows and lower highs until recently. It's been a little bit of the opposite. In terms of materials, have been kind of in a sideways channel, but then they had made some higher highs, higher lows. We just looked at some of the precious metals. You've got that in there. You've got communication services actually quite flat through here, potentially in a position of a possible breakout. Same holds true with the tech group. So this could be helpful, but I would recommend it now. I've listed this. This is going to be in the chat, or excuse me, the description section under more, under the YouTube, there is a link there for this grid chart if you are interested. But I find it helpful, particularly on the S&P 500, and then just drilling down into the individual companies there that do pay dividends, which is exactly what I did today. And I have been doing during the week to get a list of companies that have been paying dividends that might have a history of doing so, and projected earnings. Analysts like what they're seeing, and that could be a reason why we're getting more buying pressure coming in, according to the money flow indicator. So I'm going to hop back to that right now. We'll just pull it up right now and start off with our very first one. And I'm going to highlight this. I want to give you some examples of what is positive divergence, what is negative divergence. It is a rare event, actually, when we look at this indicator. I'm going to take off basically let me take off the RSI. The money flow works well with volume because it is accumulation of that volume. This, unlike the money flow, unlike the RSI, unlike the stochastic or the MACD histogram, for example, it is not an oscillator. This line can keep going and going and going, just like stock prices can go higher, it can go up, it can go down. It's a cumulative indicator. It is interesting because a lot of times when you get a volume-based indicator, and I tend to look at a lot of RSI. I think RSI can be interesting in terms of, and I think just traders in general, it's one that's very common. It's a momentum indicator based on closing prices. But when you tie in volume to it, it can be very, very intriguing because it's so separate, so different from open, high, low, close data, which is all what we're getting up here. All these different indicators you get, they're all based upon open, high, low, and close. Not down here. This is different. This is based upon buying coming in. Now, individuals, and I will say big organizations, potentially mutual funds, life insurance companies, hedge funds, just broad, large businesses that manage funds, whatever that might be, do have a tendency when they start to buy, if they buy a lot of shares, it's well known that they like to try to buy as much as they can at a lower price to not affect prices going higher. But the money flow can help us understand this better. Now, like I said, I think it's particularly important because institutions, analysts, insurance companies, whatever the case might be, when they get into a company and they buy, they tend to hold for a period of time. They don't jump in there, folks. I'll just break this to you right now. They don't jump in and buy head and shoulders patterns. They don't buy flag patterns. They're just too big. A small purchase for them might be, in some cases, honestly, 10 million shares. I could say $10 million. I've seen 10 million share purchases for sure. But I mean, $10 million might be a minimum in a lot of these companies to make a purchase. So they can't really get in and out without moving the market. So they like to try to cover that up sometimes. There's articles about that. I mean, obviously you want to try to buy low, but when they do buy, sometimes they can put a floor in on a stock because if you think about it, there's a certain amount of shares in what they refer to as the float. The float is shares that's available in the public for trading, but the float can be reduced with a number of purchases, making prices more sensitive to buying and selling in the future. If that, look at it this way, if that float shrinks, if it gets smaller and smaller, just like if you had a product and there's less of that product out there, let's say it's air conditioners in the middle of summer. Yeah, if they can charge a couple $1,000s more for that, it was a while ago. I want to say it was 2 summers ago. My AC broke, and to get a replacement is $14,000, which this guy had mentioned that I should do. Well, after about 3 hours doing some investigating, I found a part that was not functioning on it. I couldn't find the part in Utah, so I bought it online. It was here. It cost me $14. It was like $14.95 as opposed to $14,000. Got it fixed. It's been working ever since. That's a side note. But the moral of that story is it was really quite expensive when there were no parts around. And it's just kind of an interesting thing because when the float gets small, the pressure can really shoot up big in terms of pricing. In fact, we've seen companies out there that don't tend to issue a lot of shares. Booking, Priceline was one of them. BKNG, I think it's BKNG. How did it get to 4,740? Well, let's see, 43.77. How did it get there? Well, let me show you. If we go in now and we go in and we take a look at, let's just do this real quick as an example. I do have Schwab pulled up on one of my screens here. Okay, it is, where is it? There it is. Okay, nice. Okay, so let's do this. I'm going to pull it up right now, and we're going to go into a couple of areas right here. I'm going to, let me see if I could just replicate this as an example. That stock really shot up quite a bit. BKNG, booking. They do not issue shares, but yet they do have pretty good, they've had earnings over a longer period of time without issuing shares. And what happens if that share count stays small and you do have good earnings, it can affect prices because there's just a smaller amount of shares that are available in the public, and you see that here. Let me go in here and just see if I could spot, I'm gonna have to click on it real quick, and then we'll dive on into it here. Come on, where are we here? Is it gonna be down here? It is. Okay, so shares outstanding is what I'm after, and I think I could get it. I thought I had it up here. Just 1 second. I'm not going to spend too much time on it, but they have kept their shares. I don't think they've issued shares, any sort of material issuance of shares in like 15, 20 years or something. It's been remarkable. I would find it actually on the balance sheet, but let me see. Okay, yeah, so we can go into the balance sheet here. Balance sheet might have it, so too might the income statement. Let's go ahead and just show more down below, and I'll get a bigger expansion of the balance sheet. So I'm looking at shares outstanding. Yeah, I should find that near the bottom here, and there it is. Common stock. Oh, okay, that's common stock. But you'll notice even common stock on a per share basis is 51 across the board. This is going back, what, 5 years? Yeah, 5 years or so. The last 5 years. They have not raised it for, like I said, there we go, at the very, very bottom. Look at this. They only have, and this is interesting. I think this reads a little bit different. It reads to the current. So, we are going from the current to the past by reading from right to left. Okay, so let's scoot on down and let me show you this right now. So down here at the bottom, there are your total common shares outstanding into the float. What have they done? Not only are they at 41, they were at 41 million, they have been buying back shares. If those shares get tighter and tighter and tighter, it can influence the prices. And I show you that. That's why we're at 4. I mean, that's a big price, 4,000. If I take a look at a 15-year chart, look over here with me. It was at 500. Yeah, that's getting close to $4,500. Just a side note there, when the number of shares become kind of tight in the marketplace. Now, back to our example. That gives you a little bit of understanding behind the scenes as to when the money flow line might start to tighten up here. Again, now let me explain this because you might not have seen this before, but when we do close up on the day, like for example, we closed higher on the day, we take the volume and we add the volume. That's supposed to be an A. Add the volume to the money flow line. So if you begin to see big spikes in volume that are like upside or downside, you're going to be able to add that to the money flow because a lot of times it takes a lot of buying pressure to influence this money flow line like a lot. We saw that happen over here, but folks, this is a cumulative buying as prices are going higher. Now, the funny thing is it does take all the volume on a given day if it closed up on the day, and it adds all of it to this line. Now, obviously, they were buyers and sellers, but what's interesting about this indicator is if you look at it over a longer time frame, you get a sense. It kind of stands to reason. If you closed higher on the day, well then, as it went higher, then if you're getting more buying on days that close up, or more selling when it closes down, you're starting to see, is this stock being accumulated or distributed? Such a key point. It does not happen very often, particularly something like this on PSX. This is Phillips 66. Now, I'd shown you on the sectors that the sectors had been strong. Oil had been somewhat strong as of late. But look at this pullback with me, first of all. Notice how prices consolidated down through here. I mean, we were upwards, okay, so about 174-ish. We're down to 133 range right now. Look at the money flow line. This is called a positive divergence. The money flow, in other words, as prices were dropping, even though institutions that had previously purchased into this company were buying, according to the money flow indicator, they were buying, they still decided to buy even more shares as prices consolidated. Now, if you stop and think about that, that's a fascinating concept as it ties into support on the chart. If a stock's at support and we are actually breaking above this high, I mean, here is 174-ish. That was the spike over here that we'd seen. Folks, we began to take that out. We took it out again right there in a very weird spot. I tried to readjust. It's right in here. This little bull flag, it said, we have had enough buying pressure to literally equate what it took us to get prices all the way up here. That's what money flow helps us understand. No indicators 100%. But I tell you, this is kind of the rarer ones out there, and it does track money, and it's fascinating because you just don't get to see this too often. But what it signals to traders who use the money flow is that you will take out that level. Now look where we're at. We're at 131. This is a leading indicator based upon what money flow does. Volume can often lead price. Let's just go ahead and measure what kind of a run this would be in terms of percentage and a price move here on PSX if this were to unfold. Right there, it says that we would break above that level. I'm just going to put us up just slightly above there, just barely above, because the indicator says you'll break higher than that prior high. You've taken out the money flow highs, and so you'll take out those highs. It's about a 34% move. That's about a 45-point run, and there you have it. Okay? I'm just reading inside the box right there. Okay, so having said that, let's go ahead and look at the yield itself. Where does the yield stand? These guys have been raising the dividend. 105, 115, 115. Now, let me tell you, this is something that, I'll be honest with you, I mean, a lot of income investors do like to see all else equal. And that is a combination of two things. Prices going down and dividend payments going up. Because what does that mean? Prices going down, folks, dividends going up. That's going to be what you might call a raise of the dividend. The yield should increase. So we should be seeing a higher yield right now than we had previously seen. Of course, up here, not only did they raise the dividend, but the price went lower. Trade tab, 3.5 yield. Okay, now that could be interesting, but if somebody anticipated prices going up to that level, that was okay. You've got a 3.5% yield. That's annualized, of course. But with that 3.5% yield, what were we looking at? We were looking at if it did run up to that level and it exceeded this level. It was close to 34%, but I'll just say approximately 35 was the projection that we made. Now that's the question mark, will it do it? Obviously, a move like this can really, I mean, overshadow, what the dividend yield is. But my point is the dividend yield could be of interest to shareholders as well. Anybody see a price pattern potentially occurring down here too? Perhaps a price pattern. Maybe a little bit of maybe somebody's already written it in here. Perhaps a shoulder, head. And is it going to be a head over here? No, 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 no. It's going to be a shoulder. This is going to be the inverted head and shoulders pattern right there. And some traders might wait for the neckline break, which is right at 140. So they might not necessarily be interested in getting in here. But remember, on top of everything we just mentioned, this is about trying to track the smart money. And that's what brought my attention to this. Because the company pulling back and raising the dividend yield is also interesting too, right? Perhaps they have the funds to do so. But still, with the money flow, we might be seeing an accumulation, and that might be tightening the shares in the float and making it, if we could start to move outside of a range like this, or even get a K hold. Now, I want to be clear, we have not had a close above the high of the low day yet. But like I said, if the money flow has been improving, which it has, could this support 130? Could it become a little bit more sensitive to a bounce? Now, there is earnings here, but could it be more sensitive to the bounce? It could be. It could be. Because you've got some potential buying going on behind the scenes. I mean, there's volume there. Let's look at it this way. There's volume there as prices have been going higher. Now, how has this company been raising the dividends? Remember, we've got a little quick tool over here under the phase scores to check this out. If I go to phase scores, right-hand column, I'm just right over here. I can click on income, and one of those income scores is the annual dividend increases. I can tell you right now that it's raised dividends at least a minimum of 5 years consecutively. That's all we track here, unfortunately. We don't have more data than that. But the last 5 years, it's been raising those dividends. Okay, I'll pull that out. But that's in those phase scores, kind of a nice little thing to take a look at. I did create an indicator last week using ThinkScript that incorporated the money flow and RSI. It is referred to as, well, it doesn't like to reference this for some reason. I have to always go back and click on it. Momentum. Spelling it right. It's not showing. Oh, there it is. Momentum money flow. I combine the two together as well. So this is one that I've created, and you'll notice over here that it has held above this interesting RSI 70 level. We talked about this in the class on Friday for ThinkScript. But what's interesting is the RSI, I would almost assure you that it's been going like this. But when you get money flow in there, it helps to keep it in this sort of strength range if it's actually there. So it's a secondary indicator you can use. But this company has spent the majority of its time. You can't even see down here at this bottom. You've got the 30, right, which represents the oversold range of the RSI. It's a combination of momentum, which is our RSI, and the money flow. And we've really been holding this whole time, it's just indicative of accumulation. So if you like to tie that in there, I had that in my class last week, and I've got that script in there for you. If in fact you folks are interested, I could potentially put a link in there for that class if you wanted to download that too. It's just in the description field. But again, ThinkScript indicators aren't guaranteed for accuracy or timeliness. That one simply just takes data from both indicators that are already there on the platform. But I had to mention that. Okay. Yep, so it doesn't fluctuate, SJS and others, like you might see with just the RSI that gives you kind of mixed signals. It'll hold up in that strength range above 70 if you're getting that buying pressure coming in. This one held up for a year, in the, roughly, not exactly, but most of the time it spent above 70, showing, hey, there could be long-term accumulation, which you might only see right here, but on that indicator, you might get it on both. All right, let's do it. Let's take a look at it right now. For this stock, if we were looking for the possible sell signal, and by the way, some traders might want to wait for after earnings as well. Of course, they might want to just see what happens with earnings going on from there. But on the sell, for a potential exit signal, some traders will use an ATR. An ATR, an average true range. I'm going to use a 2 ATR in this case. This is ATRs are volatility adjusted stops. That didn't go over. I don't know why. I double clicked on it. There's your ATR right there. A 2 ATR, you're basically just going to take this number. It's going to be the range here. The average range on the day is about 2.8. So all we simply want to do right now, if we were to put a paper trade in on this, there's the calculator. All we're going to do is just take the 280, 2.8 multiplied by 2. That's it. 5.6. So you'd have a $5.6 stop in here as well. So you could take a look at this. I'm just going to kind of estimate this. There it is. It's somewhere in that range, or this is fascinating sometimes off these bottoms too. Do you notice where that comes in at? I've seen this so many times. It's not going to happen every time, obviously, but look at that level. Basically, that 2 ATR just says if you take out this low, I'm going to put an alert in there as a potential stop, because we are going to put a paper trade in on this, but as a potential exit. By the way, I mentioned the word stop. Stop orders aren't guaranteed as an exit. They just go, when a stop order is executed, it does go to compete with other orders in the market to sell. Okay, but right now we're just looking for kind of an exit idea, an exit strategy with a volatility adjusted stop like an ATR. Okay, we're all about Wells Wilder today, right? Wells Wilder did the ATR, did the RSI, didn't do the money flow. That was Joe Granville. Joe Granville did the unbalanced volume. Money flow is a variation of it, but it's almost the same. It's virtually identical. Anyhow, it's close to it. Let's go ahead and put this up right now, and we will just say 2 ATR, 2 ATR. This is the little note. It can text me 2 ATR, and I'm just going to go over here. Potential exit. We're going to add this to our portfolio today, but we'll go ahead and put that trade in right now. But there's your potential exit without actually putting an official stop in here. Now, where might the target be? Well, the money flow has kind of helped us out with that a little bit. Above that line, unless something changes, but above that line. I'm going to go ahead and do 50 shares ahead of earnings, and based upon earnings, I'm going to do 50 shares after earnings. You guys ever done this before? Splitting up the risk in case it goes against me. I'm only losing on, let's say 50 shares as opposed to 100, right? This is all paper money. It's just an example trade. But let's just say it drops lower. I'm not losing $100 per every point lower. I'm losing 50. But then if it starts to go up, at least I'm participating. I haven't waited till after earnings. So it's kind of a glass half full. I guess there's a way to make it a glass half empty if you think about it, but that's sort of a money management approach to it. Let's go ahead and go to the trade tab, PSX. We'll put one in here. Let's see, the last price is, the market moved a little bit after the close, but I'm going to put it very close to that 131. I'll say we'll put a limit order then of 131.50. Okay, closer to the last price. And what I'll do is I will go confirm, and let's just take a look at that order right now. Buying power effect. There you go, and that is the cost of the trade. So let's go ahead and send that through right now. Okay, it was not going to fill because the markets are closed, but there we go. All right. Yeah, a little bit of money. Potential a money management technique in there, Dragon Rider. A few other things to kind of consider there, but let's do this. Let's see, ounces, would you sell a protected put on this? Keep that in mind. All right, and I did say last week's class, Look at JB. He's calling me out on that. And by the way, thanks for the reminder. I need to, I need to do this. I'm going to find it right now. I'm just going to post that link in where we talked about that indicator, and I will have that ready for you guys here in just a second. It's the playlist, uh, and it was just for the Think script. It might be a little tricky to find. This is it right here. So I'll just click on it, and I will get you that link if you are in fact want to take a look at it. It's down below. Okay, so here it is. That's the one? Yeah. We were just combining two indicators into one, and there it is right there. That is the link for the class. And so down below, you could actually find that too. There's some information too if you're interested in that. But I figured, hey, we're talking about money flow. Might as well talk about the combination we built with the RSI as well. Okay. Let's do this. While we're at it, I think I can actually share it with you guys. Well, no, I don't think I can. Okay. Anyways, we'll just keep going on here. It's down below in the description field. Trust me, it's all there. Okay. All right. So any questions on this thus far? If you like this kind of content, you find it helpful, you like looking at the money flow indicator, for example, smash that like button. Would be greatly appreciated if you find it effective. And by the way, bottom right hand corner of the screen, definitely subscribe to our channel where you can get this kind of content more frequently. JB's got some great classes in there. There's no doubt about it. It gets lots of views and teaches some great material. You get great content from my JB within the Trader Talks channel as well, of course. All right, so we've got, what do we got here? We got money flow. We got ATR. We've got a few other stocks to look as well. What we've got. Let's go ahead and do another one here. By the way, PSX, why are they buying this? What could be their expectation for oil? What could be their expectation, the price of oil, as well as Phillips 66? Well, what are the analysts thinking? There can be something more to that. In fact, what we could do is if we go back to this and we look, let's see, if we go to PSX at the top. Yeah, so PSX, Phillips 66, there we have it. Let's scroll on down. I'm going to highlight this for you. This is a great tool right on Schwab.com. Such great material here. But look at this, expected earnings. Boom. Let's do this. I'm going to click on the show more right there so you can see it and where we might be. Well, they're expecting something to hit. The revenues seem about even here. But the prior, let's see, what do we have? Oh, the Q2. So these numbers have been going up as well. So very interesting. We'll see what goes on there. But again, we're only taking a half position ahead of earnings, given a lot of fluctuations within oil. Okay. All right, next up. The expected growth, though, I think of PXS was, I'd actually run through a search. I'd ran through a search. And I had the results because you can export those results over here. And according to what I was seeing here for next year, so all I did was run through a scan right here. You guys see it? Of dividend paying companies in the S&P 500 with EPS growth greater than 10%. If we take a look at PSX, which is where I found this as well, right there, PSX, it's showing next year, according to what they're stating, in terms of earnings growth, 41.49%. So that could be a reason. I mean, if prices are going lower, maybe that could be a reason to accumulate shares if you're a big institution, perhaps. Estimated earnings per share growth based on analyst estimates. That was one of the bigger ones I saw in here, just as a side note. Okay. All right, so let's do this. Let's go down here and let's look at LUV. Here is Southwest Airlines. Over here with Southwest, you can see clearly we have taken out these highs over here as well. The prior highs on the stock, which were right here, I just take it straight down. Just use the high as a first point. If you're looking for divergences, how have we been doing over here? And have we crossed that level? Folks, we did. We crossed that level. Now, I'm really going to focus on getting a straight line in here. Ooh, right after that down day, actually. We got an indication when we broke above that resistance level right there. It's a funny one, right? It's a break on a shorter term resistance level, but it stated basically that according to money flow, we should be able to retrace up above this level. And that's not a huge distance relative to the one we just looked at. I kind of went with that first one initially, but take a look at this. We're right holding at a support level here, and we're really just going flat. Now, again, we are in earnings season, so we have to be mindful of earnings. What are we going to get around earnings there? So let's look at that, but a really interesting indication, higher high, higher low, sideways range, just from a technical level, and holding that long-term support level that is giving us some signs that maybe volume has accumulated enough. It certainly has, according to the money flow, that we've taken out the amount of buyers that it took us to get to this high point. So it says we should exceed this level. Now, how are we doing on our shares over here? Let's go to the right-hand side. The income phase income, it's only been raising dividends for the past 2 years. That's it. The yield right now, well, I guess we have the yield there, 2.36, so a little bit less than PSX. But there you've got it. Okay, so that is the smart money indicator saying that there's been accumulation here and some real strength off that bottom. This was a new low. It was a low in this downward trend, as you could see. But look at money flow. Money flow, different. Money flow, higher low. Less sellers, but the price of the stock went to a new low. Went to 24. The stock from that point went on a very sharp trend to the upside and cleared that resistance short term before it really kind of broke up above and held it again right there, okay? So a few things going on behind the scenes here. What is the ATR looking like? The potential sell, the volatility has spiked up a little bit, but right there, it's about, what is it, $1.90? You get about 95 cents over here. So $1.90 looks like what on our chart? Here's your $1.90 right there. $1.90 right there. Let's pull it down. This is in terms of price. Watch where the $1.90 is. Look at that. Look how close it is. It's right to our support level. So you could say that $1.90 is slightly above here, right in this range, but support's there. So it's so fascinating sometimes how that 2 ATR will help you find a level of support that you might be very interested in. If prices were to take it out, that could be a possible exit level right there. So what we're going to do, exit right there around 28-ish. We're going to put an alert right at 28 or just below it. We'll let the ATR help us spot where that support level is. It'll do that time to time. And we'll go at or below. We'll say 28. Okay, so we'll say potential exit. Exit at 28. And I always just put a question mark in there. That gets me to go ahead and look at it. So remember, this can text us, this can email us. I'm in the demo account, so I haven't set up my text or anything, but I do have, I look at the alerts every day because I'm on this one daily. But you go to the at top to set up the alerts if you haven't already, application settings, and under notifications, you can put in an email address, you can put a text message in there. You get those in about 3 to 5 seconds. Even if they've been around for a couple years, this has been my experience. I get them pretty regularly when that happens. Okay, so that's that. Let's look at LUV right now. I'm just going to do 100 shares ahead of earnings. I realize it's right ahead of earnings here. And let's do one final thing with that LUV. Let's see. Are we going to do it? No, we'll have to. I'd rather just pull up a couple of other examples in just the last couple of minutes that we have left today. But I will do this for now. It's been holding. We'll just do 100 shares here. At this level, we'll put a limit. There's the default 100. And did I do 50 on that last one? I want to make sure I actually clicked the right spot. Let's go ahead and take a look at our existing orders here. No, I didn't. That's not 50. I said it was going to be 50 on PSX. Cancel, replace order. 50. All right, 50, we'll update that right now because it was going to be 50 before earnings and 50 after earnings. There we go. By the way, in some of our positions that we have over here in our generating income portfolio, we have this horrible looking position of CTAS, and I didn't get any notifications, any alerts on it at all. This was actually our best performer off of 40 shares. I'm like, what happened to CTAS? Down 12. This is one we've had for a while in this account. Just a little side note, if you're in the a paper money account, okay, CTAS, does it look like it's dropped? No, this has been one of our best performers. But what it did have is a 4-for-1 split. So it's saying that we bought this stock for, substantially higher than we did. So how do you adjust for that? I mean, maybe I should just sell it to get rid of it, just to get it off there. But you just find out the price that you purchased this at, and you can do this right over here. You can go into CTAS, and it was the price we bought it at was 525. So you would take, let's just say 525 approximately, is a little bit more than that. 525. Anytime you do get a split occurring in paper money, just take the 525 and do exactly what happened to the stock. You divide it by 4. Boom. That's our actual purchase price, 131. So if we go down to 131-ish, just approximately, there you go, there's your 131. I draw a line out from here. This is the actual reflection of how we're doing on those 40 shares. It's gone up $80.57 from a money flow breakout over here. Like I said, it doesn't have to be a money flow breakout. It doesn't work every time, but it's an interesting indication, folks, that institutions can be accumulating. And this is really, I like volume because it kind of tracks. And, institutions can say a lot of things, and you'll see ratings come out, different things, but they don't really buy. So sometimes you have to say to yourself, if they're actually buying, then that means they're kind of putting their money where their mouth is. And that's what this volume tries to track. Okay, so that was like $80.50 approximately. How are we actually doing on this stock? Because it was one of our best performers, $8.50. I'm just saying this is paper money, but I want to go through it because the split screwed it all up. Multiplied by 40. We started off with a very, very small position because it was an expensive stock, only 40 shares. It's up about $3,200 just off 40 shares. Okay, so there you have it. All right, everybody. Well, the last couple, I'll let you look at these. This is kind of your homework. Take a look and see if you can spot on these two companies divergence. CDW, I'll leave you with that one. If you're seeing any strength within the money flow, as well as CVX, if you can spot money flow on those two. All right, everybody. Well, it's great being with you. Fun stuff to talk about, but yeah, keep an eye on, different indicators and hopefully those that might give you a little bit of insight, perhaps. They try to do these indicators about buying activity. This is all about trying to spot that smart money. So on that note, folks, I'll let you go. Have a great rest of the day. Thanks for your help, JB.